Great. I think let's get started. A very good evening to you all. Thank you so much for joining in. There are about more than 200 of you right now on the call. Thanks so much for joining in. And I think many of you have joined through across different cities as well as multiple countries now. So it's a very exciting event. One-click payments, cryptocurrency, blockchain, all terms that were alien to us a few years back are today a significant part of our lives. The introduction of Fintech in the economic sector has undoubtedly proven to be a major breakthrough. And every now and then we witness extraordinary tech-enabled innovations that compete with traditional financial methods in the delivery of financial services. I think the emerging Fintech industry also brings with it an exciting range of opportunities for young adults like yourself. And who better to explain the workings of the Fintech world to you than the expert himself, Gavin Brown, an associate professor at the University of Liverpool Management School. Gavin's research focuses on payment technologies and the future of money, specifically cryptocurrencies and stable coin pricing. He's a published author, having written the book Algorithms, Blockchain, and Cryptocurrency with Emerald Publishing in 2020. Gavin is also a thought leader in cryptocurrencies and has been interviewed by several live television and radio platforms. Alongside, he's also a prominent speaker at industry talks for organizations like Credit Suisse, Bank of China, JP Morgan, American Express, and more. Welcome, Gavin. The floor is yours.
Well, thank you very much for that very kind introduction. I do appreciate it, as well as the invitation to come here today to talk to you good people and represent the University of Liverpool as well. So a very good afternoon and good evening to you all. I understand that most people are based in India or certainly the APAC region. Myself here, I'm in the UK. Unfortunately, I'm not floating in the middle of the Mersey, just outside of Liverpool. That's the Libra building, which you can see behind me. This is the waterfront of Liverpool in the city itself, if you've managed to visit. And I'm here today to talk to you about fintech and the future of finance. Now, broadly speaking, we're going to have around about a 30 to 40-minute talk, and then reserve some time at the end for some Q&A with a hard stop inside 60 minutes. However, if you do have additional questions beyond that, you're always more than welcome to reach out to me. So thank you again for the kind introduction. In terms of my background, it was given to you there. I'm an associate prof with the University of Liverpool, or senior lecturer on the UK scale. And I look after the MSc Fintech, and I'm here to talk to you about what Fintech is, and especially on a sort of crypto asset, cryptocurrency side, some of the more interesting aspects of it. So hopefully by the end of this short talk, you're going to have an increased understanding of what Fintech is, an increased understanding about some of the exciting things that are happening in the world of finance and cryptocurrencies in particular, and maybe an idea as well of what might be coming in the future as well, and how that might impact yourselves, your careers, and the organizations which you either do work for already or that you aspire to work for going forward. Okay. So before I begin, I always like to do this as a bit of a straw poll, if that's okay. And so in the chat box, I'm going to ask you, how many people have ever owned or used a cryptocurrency? Okay, so something like Bitcoin. How many people have ever owned or used one? Just a yes or a no, or a Y or an N. Okay, so a good number, actually, good number. You do tend to find that audiences in the APAC region tend to be more knowledgeable, I would say, compared to our sort of EMEA and America's counterparts. So most people say no, but a few yeses in there as well. Well, hopefully by the end of this, we're going to see some real cryptocurrency transactions and see exactly what's involved there. But thank you for the participation there on the chat panel. So I want to cast our minds back. This is slide number 2. This is the S&P 500. And what you can see here is the 2007 to 2009 financial crisis. Okay, we can see a reduction there of 56%. Okay, so the S&P 500 capital market dropped by 56% over around about an 18-month period. Now, my first question for you on the chat panel, if you don't mind jumping in, is who or what caused the financial crisis? So who or what caused the financial crisis? What do we think? Housing bubble, Tanish is straight in there. Housing depression or depreciation, subprime mortgages, mortgage-backed securities. Anyone else? Oh, dot-com bubble, I like that. That's a good idea. Okay, so a few answers coming through there. Exactly, yeah, lots of different reasons. But one thing that's interesting about this period of time is in Q3, okay, 2008, a new person, a pseudo-anonymous person called Satoshi Nakamoto came out and actually published a new paper, a 9-sided document. And I'm actually going to show you this document now, if it's okay. So I'm going to stop sharing on PowerPoint, go back into Zoom. And what I'm going to do is just take you over Oh, could the host enable screen sharing for me? Is that okay? Just so I can share. Is that all right? We had it before. Hopefully we can have it back. There we go. Thank you so much. Okay, so I'm going to jump over and go into the internet for you. And what I'm going to do is show you this. So you should see on screen now, it's just coming up. You'll see page 1 of the creation of Bitcoin. It's entitled Bitcoin, a peer-to-peer electronic cash system. Now, the interesting thing with this document, freely available, by the way, if you just go into Google and Google Bitcoin original white paper or Bitcoin original paper, you'll notice, I'll just scroll through this, right? This is a 9-sided document, okay? And what it's doing is proposing a new type of money in terms of how it's created, how it's stored, and how it's transacted. And I'm scrolling through here just to give you a feel. You can see some flow diagrams in here, a few lists of the things that it can and cannot do. There's a little bit of coding as we move partway through, a little bit of maths, nothing too crazy, a bit of algebra, a bit of matrices algebra, nothing ridiculously hard. And then at the very end, we have a conclusion, and you'll see that coming up here. And then you'll see just 8 Harvard references. So that was the birth of Bitcoin. An anonymous individual or collection of individuals called Satoshi Nakamoto proposed a new type of money. 12 years later, this 9-sided document with just 8 Harvard references, which if I was grading it as a university lecturer, I would give it maybe a 2-2, maybe a grade of 50 or 55, not very well researched, limited academic support. This was worth $1/3 of $1 trillion. 9 pages, 8 Harvard references, 12 years later, it was worth $1/3 of $1 trillion. Now that is interesting in anyone's money, if you'll excuse the pun. So what I want to do is jump back into the PowerPoint presentation and talk to you about why it matters, why it potentially works, and what might happen going forward, okay? So I know a few people are popping questions in the chat box, and there's a good frequency of questions, right? In fact, I don't think I've ever had 30 questions before I said a single word. So I love the fact that you're keen, and hopefully we'll get to as many questions as we can. And I'll stop routinely throughout the presentation as well, just to give you the opportunity as well, just to ask some additional questions as well. Okay. So I'll just pull up the chat box, make sure we can see that okay. And then we'll jump back into our slides. So this whole thing begins, Bitcoin begins, and round about the depths of the financial crisis, a new type of money. Now, you might say, why is that even relevant? Well, what you can see on screen here is, without being too technical, this is a frequency chart, frequency bar chart, and it's showing extreme or volatile events which have happened in the capital markets since the middle of the last century, right the way through until about 2011. And what you can see is that rare events, extreme long tail events, as we call them, are actually becoming more common. They're still rare, but they're happening more and more. This is all leading into a suggestion that maybe there's a problem with the way that we conduct our monetary policy. Maybe there's a problem with the way that our capital systems are structured. And so we have the depths of a financial crisis. We have an anonymous individual suggesting a new type of money called Bitcoin in the context of not just being in a crisis, but crises becoming more common, and therefore something that maybe there's a problem here. Maybe we need to do things differently. Now, you may say, well, why? Why do we need to do things differently? Well, what you can see on screen here is a QE chart from central banks. Now, my question to you is, what does QE stand for? So in the chat box, could you tell me what QE stands for in the context of central banks? Exactly, yeah, quantitative easing, quantitative easing. Now, sometimes people say, well, that's just the printing of new money. It's not quite printing of new money. It tends to be the central bank of a country will repurchase securities which are denominated in that currency. That basically means treasury bonds. What that does is it expands the money supply. It lowers the real cost of capital, so interest rates in real terms start to come down. It encourages us not to save, but rather to spend and invest. And so central banks and governments use this as a monetary policy tool in order to try and get us out of a sticky situation, an economic crisis. So just look there. Look at this chart. This is for the G10. And so you've got the Fed as the world's largest central bank presently. And we can see that prior to the financial crisis, QE was relatively low in terms of trillions of dollars at least. Then we have the financial crisis, a huge spike, at least at that point in time, in the context of additional QE money creation. And it was around about $2 trillion globally more. But one thing you can see is in the decades since, QE has become the norm. Okay, total global money now stands at a valuation of around about $90 trillion. Interestingly, look at the post-COVID spike. the spike for COVID relative to the financial crisis is disproportionately higher. In fact, the actual QE that the US has undergone post-COVID is equivalent to the entire global quantitative easing that happened in the financial crisis. So what this is doing is, again, is building this narrative of maybe something's wrong, maybe something could be done differently, using technology to enable finance and money creation to perhaps be more efficient. Now, on that technological front, I saw a headline the other day which really grabbed me, and that is that US technology stocks are now worth more than the entirety of all European stock markets. A really stark realization that technology is changing the way things are done. And often we don't realize it because it feels like it's happening slowly. And yet 20 years prior, it would have been very different in terms of how we understood, not just in terms of finance, but technology more broadly. And I've given you the two examples there of Apple and Amazon, but we've got the FANG organizations there as well, your kind of Facebooks, Amazon, Netflix, and so on. So slide 6, here's Bitcoin. I'm not going to talk about Bitcoin. I want to show you Bitcoin. Okay, so what I'm going to do is I'm going to hit stop share on that. And instead, I'm going to share my screen and we're going to go and have a look at some live Bitcoin transactions. Okay, so we're going to go into Chrome, which is where I am here. And you'll see that I'm going to log into a web page here. And what you should be able to see here, and it will refresh routinely, and I'll just refresh it now just to make sure it's all coming through okay. You'll see transactions. These are Bitcoin transactions which are actually happening in real time. Okay. Now, you may ask yourself the question, first of all, well, how on earth is this possible? How on earth can I see transactions happening in real time? Surely these are confidential. Not true. In the world of Bitcoin and decentralized cryptocurrencies, this is what's known as a permissionless system. Anybody can see it, anybody can use it. Okay, so when we see politicians, let's say Donald Trump or whoever it might be, coming out and saying, let's ban Bitcoin, it's arguably impossible to ban it. We can try and curtail it, we can try and pass new laws and regulations, but it's decentralized. It has no directors, it has no domicile, no head office, it has no governance structure in the traditional sense. It's a very difficult thing to get a handle of, which makes it dangerous and also interesting. So we can see these transactions going through here, and you can see their USD valuation on the right-hand side. In fact, when I did a similar talk to this not so long ago, it actually went through, and we saw a $237 million transaction. Now, I just saw a transaction there for $280,000, 27 Bitcoins. And that to me is interesting. It's a lot of money. It's an individual moving money from one bank account or Bitcoin wallet address to another address, and they're banking without a bank. Now, it's not being done anonymously because I can see who's done it. This person on the left-hand side here, this alphanumeric code, has sent money to this person over here, this alphanumeric code. The problem is without additional and sophisticated technology, I don't know who those people are. They could be people I know, they could be politicians, they could be business leaders, they could be criminals. We just don't know, okay? In fact, you might say, well, Gav, I'm really interested in knowing more about this person here who just sent over $250,000 to somebody else. Well, let's go and have a look in their bank account, okay? So I've just clicked into that individual, and we're now inside this person's Bitcoin wallet address. I can see that this person has actually performed in the history of Bitcoin 386,716 transactions. I can see their entire history. In fact, I've got a QR code there. I could take my mobile phone, I could scan that QR code, and I could send to that individual some Bitcoin from me to them. Okay, it's that simple. Moreover, there's a full audit trail here. So as I scroll down here, I can see every transaction this person has ever done. How much money was sent and received? Who did it go from and to? How long did it take to clear and settle? What was the transaction fee? I can see their entire history, and I don't need to ask for permission. Everybody can see everything. And not only that, anybody can actually use this system. As long as you've got an internet connection or a mobile phone signal, you have access to this. So Bitcoin, in a sense, is the bank for everyone because you don't actually need a traditional intermediary bank or payment network. Instead, the way Bitcoin is structured, and we'll talk about this in a moment, will do that work for us. Okay, so I'm just going to hit stop share on that and go back into the chat panel. Does anyone have any questions on that at all? Any questions on the Q&A that you'd like me to raise? If you can pop them in the chat panel, would be great. Okay, I will continue then. I can see a few coming through the Q&A screen. Let me just make sure we're answering most of them. I think everyone was okay with these. So, some questions about courses and things, which we'll obviously take towards the end. What's the use in transparency? Well, that's an interesting thing, really, isn't it? I mean, the transparency point is the point that a lot of people will raise, that something like Bitcoin, for instance, can we trust the source of money? Can we trust where it comes from? How do we know it's not come from criminal means, etc.? Well, having that transparency means that if I put my hand up and said, this is my Bitcoin wallet address, and I showed it to you, you'd be able to see all of my financial transactions in the world of Bitcoin, at least. Yeah, you'd be able to justify what was sent from where to where and how that money came to being. Now, there's a lot of systems, including cash, where that isn't necessarily the case. If you hold a $50 bill in your hand, you don't necessarily know where that $50 bill has been. You don't know whom it's been with since its creation. And that's not true of Bitcoin. Bitcoin has a digital footprint right the way from its creation all the way through to its usage. Okay. Good stuff. All right, I'm going to, I can see there's a few questions about courses and things. I agree, Biava as well has said about what's this mean for the future of central banks. I certainly think it means a challenging future, something to think about there. I've got some more slide content on central banks in a moment. So let's
Gavin, there are a few questions on the chat box now. Something like, is reliance on Bitcoin a good or a dangerous thing? Is that the future we should be buried?
Yeah, I can.
And many of those are there.
Yeah, so I think Surya has said, may I know the future of Bitcoin? I wish I knew. I think Bitcoin is not going to disappear. Some people believe it will go to zero. Other people believe it will become incredibly valuable and will be worth in excess of $1 million of Bitcoin. It's currently worth about sort of $10,000 to $12,000 of Bitcoin. I don't believe any of those will be true. I think Bitcoin will always have a place to play, but it will likely sort of sit in limbo, not quite being adopted, but equally not being able to be eliminated either. So a bit of a half answer there, I guess you might say. Amit has said, how many transactions are taking place? So typically with Bitcoin, anywhere between sort of 4 to 7 transactions per second. A lot of people will say that that is a problem, and I would agree. Just to put it into context, the global payment network, such as Visa, can host about 24,000 transactions per second. So Bitcoin, although it can't be used as a money replacement presently, it has the ability to become something. This is a bit like going back in time and seeing the Wright brothers first, airborne travel first happening, and then people looking at it and saying, well, you can't travel across oceans and you can't carry people. Well, no, but it's the principle of what it's doing. Bitcoin is banking without banks. It's not perfect, far from it, but the concept of what it is and what it could become is really, for me, what's exciting and what's quite an interesting thing to think about going forward. Okay, Malhar is asking about how Bitcoin can be created. So I'm going to answer that question by jumping back into my slide deck, if that's okay. Okay, so we're jumping back into slide 6. We'll see how we go for time here. So let's look at some of the features of Bitcoin about what make it interesting. You should be able to see slide 6 on screen now. So first of all, Bitcoin was created with that original document I showed you and with the white paper and coding sheet associated with Bitcoin. In other words, Bitcoin isn't controlled by a government, by a central bank, by a currency board, or a monetary policy committee. It has no central bank. Bitcoin is controlled by code, and it's code that was originally founded and published in 2008, and the first Bitcoins created in 2009. Now, what that means is that when we move in and out of different economic times and different political strategies change, typically monetary policy changes and your sterling and your yen and your rupees in your pocket all go up and down in value because of human interference. The difference with Bitcoin is that it's not open to human interference. It's instead controlled purely by codification, which has been prescribed in advance. So what does that mean? Let me tell you, for instance. So rather than having the quantitative easing problem, the total number of Bitcoins that can ever exist are 21 million, okay? So the first Bitcoin was issued on the 3rd of January, 2009. That's called the Genesis block. So the very first Bitcoin block was issued. Inside that Bitcoin block, think about it being on the cloud or the internet, if that helps. Inside that Bitcoin block, there were 50 Bitcoins, and wrapped around those Bitcoins were some cryptographic puzzles, if you wish to call it that. People were then invited on the internet to come along with their internet processing power, their computer processing power, to try and solve those cryptographic puzzles. And if they were solving those puzzles, they had the chance and the ability to actually win some or all of the Bitcoins in the block. 10 minutes later, another block of Bitcoins was created. 10 minutes after that, another block of Bitcoins. And in fact, since the beginning of January 2009, every 10 minutes, a new block of Bitcoins has been created. And people all over the world have been using their computers to try and solve those cryptographic puzzles to win the Bitcoins in the blocks, okay? Now that activity is one type of Bitcoin mining. That's what Bitcoin mining is, yeah? Now you may say, well, what's this funny graph, Gavin, you've got here on the left-hand side? Well, what this shows you is that in the Bitcoin block sequence, at fixed points in the actual block creations, you have what's called a halvening. In other words, the number of Bitcoins in a block goes down by a factor of 2. So we went down from 50 Bitcoins per block to 25, to 12.5, to 6.25, and so on. What that means is there'll never be more than 21 million Bitcoins. Now, in the context of the fiat currency, dollars and yen and euros, etc., we saw that quantitative easing was going up, yeah, which technically would devalue the real purchasing power of your currency, which is something that a lot of people look to Bitcoin and say, well, I like the fact that the currency can't be debased. It can't be reduced in its real purchasing power because its supply is ultimately fixed, okay? And that's one of the attributes, if you like, of Bitcoin itself. Good. All right. So I imagine, and I can see there's a ton of questions, but I'm conscious that if we do go into all the questions, it might be difficult. A few of them, some serious money being made. Yes, Anmol, I completely agree. What is the future of Bitcoin in India, Haritha? India's a very interesting one, actually. I mean, there's a lot of debate going on at the moment, I think, in your parliament about whether to make cryptocurrency trading illegal, but equally, and I've got some India data in a minute, some really interesting things being done in India around digital payments and digital identity. So it could be the case that Bitcoin necessarily may not flourish in India. However, some of the concepts and benefits that it brings could be used by the state in order to enable people to use payments and money more ably and more efficiently. Okay, so I'll just continue and then come back to the questions in a moment. So here are some of the Bitcoin transactions that have taken place historically. So you'll see that the largest ever Bitcoin transaction was in September of last year, and it was for $1 billion. So someone moved $1 billion in a single transaction. Okay, so an incredibly big amount of money to move, especially considering that it was done without the interference or support of a bank. Okay, I think the transaction fee on that was just a couple of $100. So it can be quite cheap to move quite large amounts of money, mainly because there's no traditional intermediary. Now you might look at this and think, well, why does this matter? Well, the reason why it matters is we potentially are moving towards something that we know as the Internet of Things, sometimes called IoT. What that means is we're going to have lots of internet-enabled devices, televisions, computers, mobile phones, laptops, tablets. We've already got them, but the number of internet-enabled devices is starting to go up. So one of the things I want to show you now, I'm just going to hit escape on this, and I want to share my screen with you again. I want to show you a live payment network. Okay, so this is a payment network called Iota. Okay, so we're going to go and have a look at this. Hopefully this is going to work. Okay, so it stands for IOTA, which means the Internet of Things Applied. And this is a live payment network, right? You should see a nice, pretty network being launched here, and you can see lots of different dots. All of those dots are devices. They are, electric cars, they are fridges, televisions, and the lines between them represents payments that are happening in real time. Okay, so Iota, a very interesting technology, similar to Bitcoin, but not using this thing that we know as blockchain in the same way. Instead, they use a technology called Tangle. Potentially, it has the ability to do many times more transactions per second as compared to something like Bitcoin. Okay, great. That was just a bit of an FYI, so feel free to have a look at that. You can see the URL at the top there if you wish to have a look at that. Good. So I'm going to hit stop share on that. Just have a look at some of the questions and also relaunch, should I say, the PowerPoint presentation. Okay, so I left you on slide number 8. We were just having a look at, thank you, Rohit. I'm glad you think it's awesome. Thank you in the chat panel. Always good to receive good feedback like that. So the question is why does that matter? Why does it matter, and what's the importance of potentially having the Internet of Things? And one of the big reasons or big things to consider coming out of this are microtransactions. So let's imagine when you go into work or you go into university, on the way in the morning, let's imagine the Economist wants to sell you an article. Okay, they want to sell you an article and they want to charge you 10 cents for it, 10 cents in American currency. When they offer you that, the problem is they'll never offer you that. Even though you might be willing to pay that, they might be willing to sell it to you. And the reason for that is the transaction fee. Now, the transaction fee tends to crowd out the value of transactions. So we tend to see lots and lots of organizations billing and structuring their business models with much higher value transactions. So what happens in the world of cryptocurrencies is it potentially has the ability to drive down the transaction fee to almost zero. And if it does that, a lot of people are very interested. Well, what does that mean for people around the world who currently don't have a bank account? Because at the moment, they don't have a bank account. And the reason for that, and there's almost 2 billion people who don't, but the reason for that quite often is because the existing financial service providers don't actually, it's not viable for them to provide that service to those people. And they recognize, therefore, because they just, if you're on less than $1 a day, every transaction you do is a micro transaction. So it could be the case that cryptocurrencies or some kind of future variation might have the ability to bring financial services to people who currently don't have the ability to access them. Okay, good. Let's go through a few things. This is Mark Carney, basically saying, look, cryptocurrencies, crypto assets, depending on how you describe them, don't worry about them. They're not a risk to the global financial system. And he's right. He's not a risk to the global financial system. And the question is, well, why would he say that? Well, why he would say that is because if we were to pile up all the money in the world, worth about $90 trillion, and then we were to pile up all of the cryptocurrencies in the world, they are actually a difference by scale of about 1,000 times. So there's 1,000 times more fiat currency than there are cryptocurrencies. Now, the question is, if they're not a threat and they're not worth very much and they're not a risk to the global system, why do we talk about them so much? So that's my next question for you. So in the chat box for me, why does the media, why do people like me write books about them? Why do people find them so interesting, do you think? What do you think? So in the chat box. Okay. Because it's shady, yeah, Javier, I agree. It's certainly got that kind of headline grabbing nature, yeah? Secure, anonymous, threat to the establishment. I agree. A lot of this is about the principle of what they are, what they could become. You imagine a more significant global economic shock. We could find ourselves gravitating away from traditional currencies into cryptocurrencies. And that's what a lot of people are thinking about. That's what a lot of people are nervous about. I agree. Let me share something else with you. I'm going to stop sharing the presentation where it is, and I'm going to go and show you a couple more screens online, which I think are going to be of use to you. So the first thing I want to show you is this. So you should see, this is CoinMarketCap. Okay, so it's this CoinMarketCap. It shows all the cryptocurrencies with a positive valuation. You can see Bitcoin at the top there, as you'd expect, and then a whole host of other cryptocurrencies here. And I'm not going to scroll through them all, but you'll notice, and it says at the top here, there are more than 7,000 cryptocurrencies. Okay, more than 7,000. In there is a dentist coin, there's a Donald Trump coin, there's a Theresa May coin. It takes about 3 hours to code a coin. So the barriers to creating your own coin have actually reduced quite significantly. Second thing I wanted to do is just respond to the suggestion that was made about shadiness. I agree with this. Let me show you this. This is a headline from the BBC News from last year about a lady who was kidnapped, right? Quite a strange thing to show in a presentation, I admit. A true story, and she's since been returned safely, so don't worry on that regard. However, why do I raise this? Well, let me just scroll down here, and you'll see that the ransom that was demanded was about 9 million euros. But interestingly, look at this. The people who kidnapped her wanted to receive payment in a cryptocurrency called Monero, similar to Bitcoin. So my question for you in the chat panel, why did they ask for payment in a cryptocurrency for what was an illegal act? What was it that's so special about cryptocurrency, which has made it that they would prefer it to, say, US dollars or rupees or yen? I'll just stop the share. Let's go and take a look in the chat panel. Yeah, anonymity, difficult to trace. Monero, in fact, is a completely anonymized dark cryptocurrency. Yeah, so it's USPs. It's like Bitcoin without the traceability. Yeah, exactly that. So it certainly has that shady component. We have to bear that in mind when we're thinking about this technology. Great. Okay, let's continue then. I'm going to go back into the slide deck. I'm showing you quite a lot online at the same time there. You should be able to see we're in slide 10 here, just looking at Mark Carney, the previous governor of the Bank of England. I'm just going to skip over the odd slide here just to sort of pull out the key bits, just so we've got enough time for Q&A at the end, because I can see there's a lot of questions coming through. Now, the important thing to recognize is Bitcoin is not necessarily the only contender for the future of money in a fintech world, okay? We've got on screen here, you'll see a headline from the FT last year. We've got 13 investment banks globally planning to launch their own digital currency, okay? So this isn't something that, you know, corporations are letting sort of drift by themselves. They're actually planning to launch their own currencies as well. You can also see changes happening at the country level. Just look at this here. This is showing in India the value of payments made in mobile payments, that's the red line, in India since the mid of 2016. So literally a fantastic increase in terms of value and volume of contactless transactions. Now, let me ask you the question, why was that the case? Why have transactions increased so markedly? Let me just jump back. Sorry, I came out of my my presentation there. Yeah, demonetization. That's exactly it, isn't it? Yeah, you obviously know your stuff. Demonetization. And what we can see is with demonetization is it's driving this. And this is all part of a broader, I guess, context. And I've got some more data on this, which we haven't got time to look at. But this is part of the Aadhaar scheme and the UPI, the idea of individuals, more than 1 billion people in India. India definitely leading the way here. To give people that digital identification, which then enables people to actually perform more transactions more quickly as well. So I've got lots of data there. You can obviously have a look at that, and a lot of that stuff you're experiencing yourselves. UPI, the Unified Payments Interface, leveraging that digital identity. Again, you can see the red line there for the volume of transactions taking place in India. And you can see an uplift around about Q3 2017, and then it increasing almost exponentially relative to mobile wallet pays, relative to credit cards, and relative to debit cards. So things changing at a country level, things changing also in terms of technology when we talk about decentralized currencies. But unfortunately, other countries are not going to be left behind, okay? They can't have India sort of stealing a march here. We can see that we have something called a CBDC, Central Bank Digital Currency. The idea that a central bank could start to issue its own, I'm going to say cryptocurrency, but a lot of people would argue it's not a cryptocurrency at all. It's just a digital version of their existing currency, a digital yen, a digital pound, a digital euro, etc. So China's been working on their own digital currency, their own CBDC, since about 2014. Relatively quickly, we'll be launching it soon. In the US, they're talking about creating something called digital dollars. The idea that each of its citizens would have a bank account with the central bank. So as well as having your bank account with, you know, Bank of America, you would also have a bank account with the Fed. And that allows the government to get money to you quickly. That's become especially important in this COVID environment when governments want to get money quickly to the right individuals, okay? All right, other things that have been happening, and this is one thing which I think you'll probably find of interest. This is the Libra currency, which Facebook wants to launch. Facebook's planning to launch its own currency. Quick straw poll in the chat box. How many people would be comfortable using Facebook's Libra currency? So it's Libra. You'd be able to use it on Facebook, Instagram, or WhatsApp. So quick straw poll. Just give me yeses or nos in the chat box if you don't mind. Okay, yeah, decent spread. It normally is. Very contentious, very, very contentious. But broadly speaking, Facebook were really keen to create their own currency that could be used on their own platform. That currency would be backed and be worth $1. So a Libra token would be worth exactly $1. And the currency itself would be backed by a global reserve of other international currencies and short-dated government securities, okay? Now, you may ask yourself, well, what's the problem with that? Well, here's two senators in the US who had a very big problem with it, okay? They wrote to Facebook, they wrote to Facebook's partners, and just look at what I've highlighted in red there. Take this on, so this being the Libra project, and you can expect a higher level of scrutiny from regulators, not only on Libra, but on all of your related payment activities, okay? So what they're saying is this is a direct threat, very un-American actually. Okay, the idea that look, if you're going to pursue this, this is a threat to the dollar, it's a threat to the United States, and if you try and do it, we're going to actually, you know, come for you and come for your existing businesses as well. And the reason they're so nervous is we've got about half the world's population using Facebook, Instagram, and WhatsApp. And if suddenly we see Facebook becoming a bank, enabling money transfer, etc., quite easily, they will literally become the largest retail bank in the world by customer numbers overnight. Okay, so it's a really interesting thing to watch there. You can see a reaction here from the from some countries in Europe. This is a joint statement picked up by Reuters from the French and German ministers. This is quite nice. No private entity can claim monetary power, which is inherent to the sovereignty of nations. In other words, you may be big, but stop trying to act as though you're a country because you're a company, and therefore you're not going to be issuing money. That's the way, that's the subtext there. However, we do live in a world of hyper-globalization. We live in a world where if Facebook was a country, it would be 60th in the world by GDP. You know, we live in a world where McDonald's has got a higher credit rating than the country of Ireland. So the fact that corporations are starting to behave like countries, using the benefits of technology and all the fintech advancements that are being made, perhaps not that outlandish and perhaps not that surprising, I guess you might say. Moving on to the final sections before we open up for Q&A in the final sort of 10 or 15 minutes. You'll see on screen here, this is JP Morgan. So JP Morgan, you're perhaps wondering, why on earth is he talking about JP Morgan? Well, JP Morgan created their own currency called JP Morgan coin or JPM coin, and they use it for institutional money transfer. So we can't use it as individuals, we're the retail market, only corporations can use it. JP Morgan are the biggest movers of capital in the world. They move about $6 trillion a day. And now they've got a network of approximately 300 plus banks who are all using this JPM coin. And one of those banks that are using it is Deutsche Bank. So this is all happening without us seeing it. And this is using the benefits and the technology which underpins things like Bitcoin, for instance. Okay. So going forward, lots of updates to think about, lots of things to keep your eyes open for. Particularly keen to watch China's CBDC launch. Also keep an eye on the Indian parliamentary process discussing cryptocurrency trading and whether it will be banned or not banned. Obviously things happening as well at the corporate level. Wells Fargo talking about introducing their own currency. And it's not mentioned on here, but BIS, the Bank of International Settlements, also hoping to research further with central banks the idea of coming up with a new type of money, a CBDC. Okay. So that's me in terms of the talk. Just to give you a few things in terms of the University of Liverpool. So we have the MSc Financial Technology or MSc Fintech, of which I'm the lead for that particular program. That will be launching, the first intake will be in 2021. And therefore applications open for that program next month. So if you have any questions on that, you can reach out to me or reach out directly to the university. Obviously, the MSc Financial Technology is not the only postgraduate program we currently have here at Liverpool. We've got many others as well, lots of management programs, MSc Finance and Investment as well as the flagship MBA program as well. So there's a URL there, or you can just go to Google, University of Liverpool for your postgraduate study information. Finally, in terms of contact, how can you get hold of us? There's some contact information, both in terms of email address. Most of these you could search anyway and find yourself, but we're always open to questions to support you, etc. as well. In terms of me, I look forward to connecting with you, talking some more. I've got various books and speaking engagements. Go and have a look for those if you're interested in this particular space. But I guess finally, just before we close for Q&A, just a big thank you from myself and from the University of Liverpool and to Leverage EDU for giving me the opportunity to talk to you about fintech, talk to you about cryptocurrencies, and also kind of dovetail into that exactly what may or may not happen going forward in terms of the world of cryptocurrencies in particular. Okay, good. So let's stop the share there now and go on to Q&A if we can. Do we have any particular Q&A themes coming out of the Q&A panel? I know there's a lot going on there.
Gavin, hi. This is Rohit here.
Hi,
I've just picked up a question here, which I think might be interesting for you and the group. So one of the people has asked, as there is a limit to mined Bitcoins, how will the supply be ensured without creating a bubble due to excess demand?
Yeah, and I think a lot of people do talk about that. I mean, the actual supply itself is curtailed. It is 21 million. And therefore, we are reaching that limit already. We're getting close to 19 million at the moment. So if you look globally, there's going to be You know, when they've all been mined and all been created, there'll be one Bitcoin for about every 260 people on the planet. And that supply is fixed. And if we get ourselves into a situation where economically people find Bitcoin more appealing, at the same time supply goes down, then yes, there will potentially be a bubble, because in any supply and demand economics, if supply goes down and demand goes up, that price is going to go up. And that's what a lot of people who are long Bitcoin, that's what they're hoping for, really. So yeah, will there be a bubble? Potentially, yes.
Thank you. And a more general question, you know, in terms of, I've had a few people ask me, what is it that we would be looking for when they, you know, from students who want to study fintech with Liverpool? So if you could just shed some light on what you think are some essential prerequisites for anyone wanting to study fintech at Liverpool.
Yeah, that's a great question. Thanks, Rohit. I think the interesting thing, first of all, with fintech is that it's a very broad house. What do I mean by that? Well, the area of fintech is pluralist in nature. Okay, so some people are involved. You know, I come at it from a financial background. I used to run hedge funds, used to work in the City of London, worked with traders, managed assets, and that's my perspective. Other people come to fintech with a legal expertise. Other people come who are interested in sociology and the psychology of money. Other people are interested in regulation. And as you can imagine, everyone in between. And therefore, there's no necessarily, you know, you must have done a certain subject. You know, you don't even need to have studied finance. You know, as long as you're coming into this with a healthy appetite to learn, that's really what we're looking for. Now, in terms of once you enter onto the program, there's some quantitative modules in there. So if you're quantitative in nature and you enjoy things like finance, there's modules in there in terms of coding. So there's Python for finance, with no assumed knowledge, to give you that kind of ability to not just code, but understand what it means to be a coder. Equally, if you're more interested in the more qualitative aspects, there's modules in digital innovation strategy. So how do you manage new organizations in the kind of digitally enabled age in terms of fintech? And then I guess finally is to say that at the end of the program, there is a dissertation. And the great thing with any dissertation is you get to write about whatever you're interested in. So if you're interested in trading and pricing of Bitcoin, go ahead, you can do it. If you're interested in payments, if you're interested in the Indian government and what they should do to enable digital payments, you can do that. You know, you can do anything at all as long as it has a fintech component. So, you know, in summary, we're not looking for any prescribed thing in particular other than a healthy appetite and, an ability to learn more about fintech. It's actually quite a broad acceptance in terms of the people who we can admit onto the program.
Thank you, Gavin.
No problem. Abhinav, I believe, has got a question about fintech-related projects and research work. Maybe I can't go into all of them, obviously, but I'll give you an example of one I'm looking at the moment. Liverpool is actually very big on modern slavery. Okay, so the idea of understanding what modern slavery is, how it can be prevented, how we can improve policies around that. So when I joined the university, one thing they're really interested in is typically if someone's in a modern slavery situation, they normally don't have control of their own finances. Normally, they don't even have a bank account. So the idea of a technology where crypto assets or blockchain or whatever it might be can be used to actually give an individual access to financial services in a non-traditional way to empower them is actually quite interesting to people who study modern slavery, because it could help them overcome the situation they're in. So I'm currently working with a research team out of Liverpool looking at that, looking at sort of piloting and working out, would that be a benefit to the sort of modern slavery understanding? And if so, what kind of policy could we put in place off the back of that? So that's one example. I guess another piece of example, I did a talk the other day at HMRC and for the Treasury here in the UK, and they're very interested working with chain analysis to basically to identify who owns cryptocurrency and where are they trading. And this is more about taxation and the idea of curtailing the shadow economy, the idea that people may actually owe tax on their cryptocurrency holdings, but are not necessarily declaring it. So yeah, it's a very fluid picture, as you'd imagine, but lots and lots of research project opportunities, both in terms of government and in terms of corporations, as well as other parts of the university as well. Okay, other questions coming through. Abhishek has also said, post-COVID, how will the fintech industry be? It's a strange one. It's a bit of a mixed picture what we're seeing so far. In a lot of instances, the technology which is employed by fintech companies has actually flourished in a kind of COVID environment because of the need to be at home. The idea to be able to operate digitally has actually enabled more throughput and more demand for certain services. I mean, you know, I'm just talking to you on Zoom now. We wouldn't call it fintech necessarily, but there's lots of digital platforms where the dynamic has changed. However, there's also evidence to show that some of the smaller companies inside some of the fintech sub-industries are actually struggling, and in fact have even folded since, because they just didn't have the reserves to be able to cope with this amount of change this quickly. So overall, bit of a mixed picture. What I would say is that particularly with fintech, you know, from my perspective at least, you know, you look at the way our financial services are structured presently, and this technology is coming to disrupt. And whenever disruption happens, there will be winners and losers. And therefore, if you can have a fintech appreciation, whether you come to Liverpool or not, just having a skill set which is oriented and aligned towards fintech should put you in a better in terms of your career path, in my view. Okay, any other questions? No, so yeah, Tanish has raised a good question here. Is fintech crypto only? No, it's not. It's certainly not. I only raised and gave this talk on the idea of cryptocurrencies, which is a small aspect of fintech, simply because it's quite topical, quite interesting. Other areas within the fintech space would be areas around law, areas around regulation, areas around business strategy, areas around coding. Effectively, fintech, you know, if we look at the tech part of that, the suffix of the word, you know, you look at the enabling technologies. They are cryptography, artificial intelligence, big data, decentralization. You know, all of these things are coming together to disrupt financial services, because financial services in particular is just the movement and storage of data. That's it. And therefore, they're kind of ripe for disruption. But you know, one thing that we look at in the introduction to fintech, at least, is that it's not just financial technology that's being disrupted. You've also got law tech, regulatory tech, prop tech, so the world of property. You know, you name it. If it, you know, this is as pervasive as the internet was back in the late 90s in terms of the step change that we're going to see across multiple industries and multiple geographies. No problem, Tanish. I'm glad that answers it. Does fintech always require coding, or would there be any analytics? Yeah, there's also a lot of it around finance, as you'd imagine. So there's a module looking at financial statement analysis and interpretation. We've got the largest Bloomberg suite in the UK, in Liverpool. So we use Bloomberg a lot in terms of how to extract data, how to actually sort of find your way around the Bloomberg system, how to drop data down into things like Excel, or more advanced statistical packages if you wish to, things like Stata, etc., or even MATLAB, depending on what you want to do. But equally, you know, if you're there, and I'm not data experienced, again, it's absolutely fine. You can go from a standing start and get used to things and understand how to interrogate financial information using Bloomberg and similar. Equally, if you're very experienced and you wish to enter at a higher level, then yes, there's more statistical packages available for you to push for your particular skill set as well. So that's really why at the start I said it's quite a broad offering in terms of your own aspirations and in terms of your own skill set as well. Said, is a bachelor's in international business enough to get a good job, or is a master's mandatory? Certainly not mandatory. In terms of good job, I mean, obviously that's quite a tough question to answer, because, you know, what is a good job? It depends how we define good. You know, typically my view has always been that, I mean, I'm an educationalist, so you need to obviously, you know, review what I'm saying with a certain amount of bias, but I always believe that, you know, an investment in yourself is never a bad investment, right? You know, I've got a couple of degrees, I've got 2 master's degrees, I'm a chartered accountant, I'm doing PhD, I've got all these various things, and I just enjoy learning. You know, so would it be, you know, how about this, if you can find the role that you're happy with and you can do it without a master's, then go for it. Stick with your role, do what you want. However, if you're uncertain and you can't get the roles that you're looking for, an additional education, in my humble opinion, is never a bad thing. It's never really going to harm you. It's only ever going to increase the power of your candidacy. Okay, what else? How to get a scholarship? Himmat said, yeah, I saw a few scholarship questions before. So let me just, I'm going to share my screen and just quickly show you online where you may wish to go for this. So let me share this with you now. Okay. So what you should see on the screen now, this is a very simple to find this as well. All you've got to do is Google University of Liverpool postgraduate scholarships, and you'll see here, and you can appreciate I can't give a quick answer to this. Master scholarships and awards, there's some for international students, general scholarships, and then there's some that are country specific or even demographic specific in terms of maybe gender or age or background or sociological circumstance. And then we've got some subject specific scholarships. So what I would do is advise you to go and have a look for that particular page. As I said, just University of Liverpool postgraduate scholarships. It comes up first hit on the Google search term, and go and have a look there. And if scholarships are important to you, and they normally are, have a look through those, find all the ones which you're eligible for, and then obviously that will give you an understanding of how likely you are to achieve one, and also what the mechanism is for application as well. Okay, I'll hit stop share there. I'm just conscious now that we are at the hour mark now, so I'm probably going to hand back to Rohit, and unless there's any final questions, Rohit, just to say a big thank you for the opportunity, and also to everyone else for allowing me to speak to you today.
Thank you very much, Gavin, for taking the time. And Vijay, thanks to you and the team at Leverage Edu as well for setting this up for us.
Absolutely, a pleasure. Thanks, Gavin. Thanks, Rohit, for joining us. And Gavin, this has been super duper insightful. I'm sure all the participants here had a gala of a time listening to you and learning a lot about fintech and cryptocurrency. A big thank you to all the participants as well who've joined us. Regarding any admissions process to Liverpool, please feel free to sign up on leverageedu.com, and we can guide you further on how to go ahead in your journey to apply to Liverpool, to the University of Liverpool. Great.
Excellent. Thank you, everyone.
Thank you.
Thank you. Thanks, everyone.